Indicators for day trading are a dime a dozen. We've all seen a million of them, and today I'm going to show you something that, by the way, also would apply for swing trading and even long-term trading, frankly. If you put this on a monthly, weekly chart, you could do this for some real long-term trading and even investing. But today we're going to show it to you on day trading examples, and the indicators that we're going to be using are the MACD and the Bollinger Bands. But what's unique about these indicators for day trading is that we're going to use them in combination with each other. So it's going to be an indicator of an indicator. Now, what the heck does Barry mean by an indicator of an indicator? Good question. Don't you love it when people refer to themselves in the third person? All right, promise not to do that again. So normally when we are using Bollinger Bands, we're using them on the price bars. And that's fine. That's cool. I like to do that too. However, what we're going to do today is we're going to look at MACD. And by the way, the MACD settings that I'm using here are just the standard 26, 12, and 9. And that's what these red little dots are. I plotted them as dots just so that I could see them very clearly. They would really stand out over against the lines of the Bollinger Bands. So the upper and lower horizontal Bollinger Bands are the blue lines, and I just like the way it visually stands out this way. Anyway, you can customize that however you want, but we are creating here, instead of Bollinger Bands of price, we're creating Bollinger Bands of the MACD indicator. And the Bollinger Bands are set, again, at the standard setting, which is generally 2 standard deviations of a 20-period moving average. Okay, so I didn't really change any of these settings on the indicators, although you can play around with that if you want to as well. Okay, so now let's just deep dive into, well, great, that's kind of interesting. We're creating a Bollinger Band of the MACD instead of a Bollinger Band of price action. How do we apply that? Well, this is how we apply it. So here are the kind of setups that I look for, and I'll give you a couple of examples. First thing I will say is, since we're talking about day trading today, and this is a 3-minute chart, by the way, it doesn't really, I mean, it does matter, but the first thing I want to tell you is that since we're day trading early in the morning like this, I find that these signals are not necessarily as reliable. So I don't take that first impulse move generally. We'll often get a brief impulse move like this that I'm not going to tape because it normally doesn't follow through. It's just sometimes they do, sometimes they don't, but we're trading probabilities and I find that most time it doesn't. So therefore, I'm waiting for the next move. Now, what am I waiting for? I'm waiting for the typical kind of Bollinger Band squeeze pattern where the upper and lower the upper and lower Bollinger Bands squeeze together, right? They come close together just like that. And then the MACD hits the upper or lower level. And I'm looking for that to then go long, because we're looking at this as a low volatility on MACD, and then we want it to start expanding and go to high volatility. And if it hits the upper one, we go long. If it hits the lower one, we go short. And as you can see, sure enough, nice impulse move there. Yay, got it, nailed it. Now, another thing to look for, so that's the basic signal, first of all. That's the basic signal. Now, a secondary signal you want to look at is, for example, here. So we put in a high, and look what happens. High on price, but look at MACD. It pulls away from the Bollinger Bands, right? Stops riding them. I call this riding the Bollinger Bands. And then it lets loose of them. So that's a nice indication of, that's a high probability high. And you get kind of the same thing down here, except it's we didn't get an entry into that move, but here you might think, okay, maybe I should go long, maybe I should go short, but no, because the MACD doesn't touch the lower Bollinger Band. That is essentially telling us that the market is not making a strong impulse move to the downside, and therefore not really going to be a great trade. And again, that proved to be very true. Market just kind of goes sideways after that. Plus, we don't get the Bollinger Band squeeze there. See? Okay, so let's move forward here a little bit. And again, what happens? Well, there we go again. We get the same pattern. Let me make sure you guys can see all of this. Yeah, that looks good. All right, so we get the same thing. Bollinger Band squeeze, right? You got to wait a little while. So we don't, for example, this is actually a good point here, very important point. So the first time when we get, you might say, well, but it hits the lower Bollinger Band here. Yes, it does, but we don't want to go short. Why? Because the squeeze is still just starting. So we want to take the trade out of the squeeze, not at the beginning of the squeeze. So we wait for it to get in there, and then we wait for it to start expanding. And what you want to see are the Bollinger Bands starting to separate, to part. So the lower one to go down, the upper one to go up, and then whichever one it hits, that's the one that we're looking for momentum. Remember, MACD is essentially a, well, traditionally it's called a momentum indicator, but it's really more of an acceleration or velocity indicator. But boom, yes, yay, we get a nice impulse move there, and we are golden. So the type of trade this is actually is a volatility trade, but instead of using the Bollinger Bands on price, we're using it on a momentum indicator. And it can sometimes give you different signals. Now, let me show you a couple more examples because I want to keep you out of trouble. It's very important that you learn the details of this. So, cool. So we got it here. We went long. Notice, same pattern. We put in a high. What happens? Bollinger Band pulls away from, or I'm sorry, the MACD pulls away from the Bollinger Band. So, done. Then we come back here. Now, again, you might say, wait a minute. Oh, it hit the upper Bollinger Band. I should go long. No. Why? Well, we already told you, because the Bollinger Band is squeezing together. The upper and lower bands are moving toward each other. So we don't want that. Same thing here. They're really just still kind of going sideways. So, and then now here it does go up. It's toward the end of the day. In fact, that is the end of the day. We do get a little bit of an up move at the end of the day. One last example for you, just to bring home the lesson. So again, beginning of the day, right? That's this horizontal line is the beginning of the day, just to be clear. By the way, these are California times down here, so don't get confused by that. I live in Los Angeles, so I put California times up there. All right, so again, we get the impulse move down. We do hit the lower Bollinger Band. A couple of problems. Number one, our rule is that first impulse move at the beginning of the day, normally not good, and it's not. Number two, it does touch the lower Bollinger Band, but look, we're not in the squeeze, right? We don't have the squeeze first, so it's disqualified on 2 counts. Now, here we do have the squeeze, but we don't want to take it right away, because the squeeze is just starting. So the 2 Bollinger Bands are coming together. We wait until they start parting, and we get a little bit of a down move there. Now watch this. It comes back up, does not touch the upper Bollinger Band. So it comes up, comes back down, and it does make another impulse move down. Right? The squeeze happens. Look at this. If you could see this, that moves up. This one moves down, talking about the Bollinger Band. So after this goes sideways for a little while, then this is a point here clearly where the Bollinger Bands are moving in opposite directions. They're spreading apart, and we got a momentum move, and we're golden. And so sure enough, again, last thing, just to reiterate, we get a nice divergence there. And that's not really a divergence, but just MACD pulls away from the Bollinger Band, meaning it's slowing down. Momentum is slowing down is how we would literally read that. And then we wait for a nice candlestick pattern. We wait for resistance. See, that's what you're looking for, is the confluence of time and price. So we get a nice topping candlestick pattern. We got resistance. We got momentum slowing down. And that's likely when resistance is going to hold, is when momentum slows down, because price tends to go through resistance when it's moving on strength, and it tends to bounce off of resistance when it's moving up on weakness. And this is a sign of the price action moving up on weakness. So if you like the video, please understand that it is not free. Well, all right, literally it is free. But according to the universe, if you got value from it, then you have a moral obligation to pay it forward by clicking on that beautiful little share button down there below. And that is the best thing you can do to share it with other people. And also, that encourages me to continue creating more videos to share with you. Also, if you're watching on YouTube, please subscribe. We're getting a lot more subscribers coming in right now. Very exciting, and that motivates me as well. And you'll be notified, by the way, whenever I release a new tutorial that way. Give us a thumbs up, leave a comment. I love your comments. And we have a special offer right now for YouTube subscribers. I'm giving you one of my favorite trade strategies. It's called the Rubberband Trade. It has a very, very high win-loss ratio. I get emails all the time from people thanking me for giving away this trade. We got people making money without paying me anything. I give it to you for free, and I want you to start making some money first. So obviously, take the trade and trade it on a simulator or demo account first. Make it prove itself to you. And it's a simple trade. I'll teach it to you in about 26 short minutes. You can get the Rubberband Trade strategy absolutely free by clicking on the image in the top right corner of this video or in the description below the video. And if you're not watching on YouTube, there's probably a link somewhere below or in the opt-in form on the side. Once you do one of those actions, I'll personally email the video to you with the Rubberband Trade strategy.